This is actually a fascinating one. Crystal, you flagged this. Let's go ahead and put this up there on the screen. I know you've been diving into this a lot.
Yeah.
LA's office towers have, on average, $230 in debt per square foot. The only building that actually is sold this year went for $150, $4 per square foot. So that's obviously a huge delta. The biggest landlord in Los Angeles, which is called the Canadian giant Brookfield, has actually defaulted on more than $1 billion worth of loans already this year. And so really what they're pointing to is that this massive debt bubble in commercial real estate and the lack of people, especially in cities Los Angeles, San Francisco, Chicago, New York, and Washington, D.C., could absolutely blow up in all of our faces. And really the time that it would start is now, because they've used a lot of their cash, they've tried to weather the storm, leases are starting to go up, and a lot of people are like, yeah, I'm not signing, or I'm not paying, sorry, my employees aren't coming back to the office, and they don't have the same level of cash flow or of future value that they once had. And the dramatic drop in all of that backstops a lot of loans and then commodities on Wall Street. So Los Angeles is a ticking time bomb with their decline in the downtown. Washington, D.C., where you and I are, Crystal, right now, I mean, I don't think people understand that Washington, D.C. is a ghost town compared to what it once. I spent my whole professional life here, especially in the downtown area. And when I go now, it is at best 1/10 of what it once was.
Yeah.
And really, I mean, and anybody who commutes or takes the metro or any of these can tell you that. And, the city has changed, even the traffic patterns. Rush hour is at 3:30 now, which is crazy. It's like everybody's leaving the office at 3:30, even on the 3 days or whatever that they do happen to come in. New York is a little bit different. Commerce apparently demands people to come into the office more often, but flexible work has still dropped things by 40%. San Francisco is donezo. Like from my family, I've been to many of those neighborhoods in San Francisco, which were once like thriving business districts, or at the very least had a lot going on. From everybody I know who's visited since has completely either abandoned or they've moved to different parts of the city. And it's not a surprise. I was in downtown LA not that long ago. It was basically me and a bunch of other people who were there for a conference, and nobody was actually there for any other reason.
Well, the hardest hit and the most likely to be hit very soon are the West Coast cities, because on top of the pandemic trends of people working remote or having hybrid work schedules, they also are dealing with this massive tech session, which impacts them more than any other cities in the country. So in San Francisco, put this next piece up on the screen. I mean, this is really ground zero. They say, this is from The Guardian, they say vacant skyscrapers, empty trains. Can San Francisco once again reinvent itself? They cite in here a study out of UC Berkeley comparing mobile phone data across 62 downtowns in North America. They found that San Francisco's recovery is dead last, with only 31% of the activity that it had pre-pandemic. Some of these major tech companies are leaving downtown. They don't need the office space anymore. This has obvious massive ripple effects in terms of local businesses, the shops and restaurants that rely on office workers coming in and spending their money while they are working downtown. All of those places are really, really struggling. And so the city is trying to figure out how they avoid the so-called doom loop of, once these office buildings go vacant and you have a lot less business in the city, then you have a lot less tax revenue, and then you can't keep up, public transportation and infrastructure spend, and the whole thing starts to decay and decline. So they are frantically trying to figure out what they can do. I mean, one thing in San Francisco that's really obvious is they have, perhaps worse than any other place in the country, this massive housing crisis of wild unaffordability and a lack of, they need way more affordable housing is the bottom line. So there has been this thought of, okay, we'll take all these giant office towers that are now vacant and transform them into residential apartments so that you can deal with your housing costs, you can bring people back to the downtown, you can maintain vitality. That is theoretically possible, but there are a lot of obstacles in the way of that happening. And first of all, a conversion like that is not simple and straightforward. It's complex from like a just, development and like architectural perspective. Dean Baker, who's the co-director of the Center for Economic and Policy Research, he said the city is set up to serve a large commuting population. That population is gone and not coming back. It will be a doom loop if the city doesn't make it a top priority to convert commercial to residential. California, and I think San Francisco in particular, is also notorious for making it very hard hard to do construction. There's like a long permitting process, zoning, all this stuff. So they need now to aggressively rethink what the city is going to look like before they get behind the 8 ball and they already have big budget deficits that are looming and that are only going to get worse with time. So it is quite a dire circumstance for them.
Budget, crime, they have everything that could possibly go going against them. It's expensive and it's not a nice place to live. That's basically
because I loved San Francisco.
Oh, it's a great city.
Yeah, it is a great city.
I mean, look,
it's vibrant and interesting, and culture there, restaurants there. Like, it's beautiful, wonderful. Like,
people get mad when I say this, but California wins on all the fundamentals. Look, I like Texas. It's where I grew up. But listen, the ocean is nice, and so is weather where it's hot, but it is also not crazy amounts of humidity, and also the sun shines. I mean, look, it does. You can actually go look. I'm obsessed with these. There's like temperate charts, which shows you the only real zones in the U.S. with the best weather. And the way that they define that is like X amount of days without clouds, X amount of days without rain, X amount of days with sunshine. Almost all of them are in Hawaii and in California.
Yeah.
The Bay Area is one of them, Los Angeles, San Diego. There are certain areas on the East Coast, I think it's like Georgia, South Carolina, Cape Cod, and others. But they really only qualify because they're super nice in the summer, but during year-round, there's no beating California weather. Sorry, everybody.
Yeah.
But, part of the issue is that's why they're the biggest state in the country, and there's a lot of people who live there, and now there's a disaster of governance, taxation, and so much more. The downtown areas, as you were pointing to, is a real problem. And the other issue is that they have net population decline. So a lot of the people who did leave are exactly the type of folks who would be in these office buildings, in another world. And they moved to Texas, they moved to Austin. Most of them who even moved there aren't even going to the office. A lot of those people are working either fully remote or in some sort of hybrid situation. So overall, I think it's a very bad time to be a commercial real estate developer or a commercial real estate landowner, because another thing that they point to is this entire industry floats on debt. None of these people have large reserves of cash.
Right.
It's literally the name of the game is you price your rent like right here, like a little bit above where your debt servicing is, and then you just hope and pray, and then over years you become a billionaire, and you use a bunch of depreciation and other nonsense in order to write all of the stuff on your taxes. It's a crazy business.
President Trump gave you more of that too.
I don't understand I don't understand you can even breathe when you're that, close to bankruptcy constantly.
Live for that.
Yeah, I guess they do.
Some people live for that.
Good for them. Yeah.
One thing that's an important note just on like the economics of this is you're probably thinking, for those of you who have knowledge of like the local rental and real estate market, like rents haven't really come down. So there are estimates that these buildings valuations are going to crash by something like 40%, which is, that's an astonishing fall in value. But so far rents haven't come down that much. Well, why is that? It's because if you drop the rent to reflect what the actual valuation is and what you might actually be able to get tenants in, well, that's going to immediately crash your appraisal. So when you are then up to renegotiate your loan and try to take out a new mortgage to try to be able to roll this thing over, your appraisal is going to come in way lower. You're just dramatically underwater then. And so it's a disaster for you. So a lot of developers calculate, understandably so, that it's better to keep rents where they are and take the hit in terms of a lost tenant for the time being in hopes that they'll be able to roll over those loans. Now that also becomes much more difficult because of the mortgage rate increases, which, not only impact residential loans, but also impact these gigantic, loans for skyscrapers that become wildly more unaffordable as well. Not to mention the banks aren't stupid. They're looking at this and potential, massive drop in valuation, and they're not feeling too excited about renegotiating a lot of these loans as well. So that's why we're sort of in this, in-between zone where everybody's just holding their breath and hoping that conditions improve for them by some sort of unforeseen magic. And it feels a little bit static, even though there's a ton of pain and collapse and potential devastation just underneath the surface. So that's part of what is going on here as well. But, this story of how downtowns will reinvent themselves in a new era with less office workers is going to be one of the things that, this is going to be a major trend over the coming decades. Cities that are able to figure this out, that are able to get ahead of it, that are able to, I think the key is going to be building out affordable housing to bring people back to the downtowns so that while they're working from home in their apartments, in their condos, in their houses, in your city. And the cities that get on top of that fastest and anticipate the need the soonest, I think, are going to be the ones that succeed.
Yeah, that's right.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.